Stocks on Wall Street end on a mixed note. The S&P 500 stages a comeback but powers gains as U.S. President Donald Trump criticizes China for not buying U.S. soybean. Dow Jones sees a 1,000-point swing aided by banking stocks. Fed Chair Jerome Powell says economy may be on the firmer footing but job market weak. Asian markets trade higher as investors track economic data from China. GIFT Nifty is indicating a positive open for the Indian markets. Crude oil prices settle lower amid renewed trade tensions between the US and China. Gold, on the other hand, notches a fresh record high above $4,100 on expectations of a Fed rate cut this month. And U.S. President Donald Trump says his administration is considering terminating business with China having to do with cooking oil in retaliation for Beijing refusing to buy U.S. soybean. Adds that China is committing an economically hostile act. And IT major Tech Mahindra September quarter profits fall slightly short of estimates while revenue grows sequentially, led by banking and manufacturing verticals. Also, watch out for Axis Bank, who will report their Q2 FY26 numbers today. CNBC TV 18 poll suggests profits may fall 18%. Hello, good morning. You've tuned into Power Breakfast on CNBC TV 18. I'm Vinny Motiwala. Thank you so much for tuning in, as always. Now, a lot that's happening globally, a lot of commentary that comes in between US and China. But today, the indication that we have from the Asian markets, that's going to be key as well. Positive start is what the Asian market right now is on. Hang Seng, 1% uptick. Taiwan Index, 0.6% of uptick. Whether you look at ASX 200, Nikkei, Shanghai, all of them are managing to hold on to that green. More than 0.5% of gains for most of these indices. Now look at the Nifty implied open. What's the indication coming in here today? That's also a positive start right now. 64 points uptick that we are seeing coming in for the Nifty implied open. But a lot of cues on the global front, right? So how is that going to be impacting more in terms of our Indian markets? What should we be keeping an eye out on? We have a team of research here to set you up for trade, tell you which are the important stocks to watch out for, as well as what is going to be happening in the world of F&O. We have Gaurav as well as Sudarshan here, but before I go to them, let me set you all up for trade and what we are keeping an eye out on. Given that US markets, they managed to actually close very mixed. While we saw S&P 500 and Nasdaq, that closed lower. We had Dow Jones that was gaining in the trading session yesterday. Obviously, like I said, there was a lot of talks that happened between US and China as well. Donald Trump criticized China for not buying US soybean, threatened China with cooking oil embargoes over this soybean issue. And Chinese Commerce Ministry also said that they will be banning dealings with Chinese companies with 5 US subsidiaries of South Korean shipbuilder. So concerns came in on that front. Now, FIIs in our Indian market, what did they do? Actually, they continue to be sellers. Second consecutive day that FIIs were sellers in our markets, while DIIs were buyers for around 3,661 crore rupees. Other than that, today what we're keeping an eye out on in terms of cues, we have RBI minutes, trade balance data on the Indian front that we'll keep an eye out on. Wellspun Enterprises fundraise plan is there. A lot of results that are expected today. Axis Bank, Angel One, HDB Financial Services, HDFC AMC, HDFC Life Insurance, KEI, Muthoot, among some of the names that will be reporting numbers. IT companies, keep an eye out on that. Persistent as well as Tech Mahindra will be reacting to their Q2 FY26 numbers that they reported yesterday post-market hours. Hyundai Motors, their first annual investor meet, so keep an eye out on that. When you look at Indian markets versus the Asian markets yesterday, they were slightly better. So you know that performance was slightly better. Today, will we outperform these Asian markets will be key to watch out for. And Nifty implied open, like I mentioned, is indicating a positive start, given that Nifty ended about the 20-day as well as the 50-day exponential moving average yesterday. But let's move on to Gaurav, who's here to tell us which are the important stocks to watch out for in today's trading session.
Well, yes. First, let's talk about Tech Mahindra, because the numbers, when we look at it, margins actually improved to 12.1% versus our own estimates of 11.7%. But at the same time, net profit that increased just by 4.8% on a year-on-year basis, and it was a little lower than what we were estimating. Persistent system, here we saw net profit increasing at around 471 crores now, and margins also expanded to 16.3%. Thyrocare, when we look at this stock, net profit that increased almost by 79% on a year-on-year basis, and at the same time margins also improved. Let's not forget company is going to issue bonus share in the ratio of 2:1. Signed DLM, when we look at it, it was actually a little bit of weak number because net profit, now even if that has doubled, revenue that declined almost by 20% on a year-on-year basis. Sula Vineyard came up with the Q2 updates. When we look at it, net revenue declined almost by 1.1%, while their own brand revenue that declined almost by 2.5% on a year-on-year basis. Kolte Patil also came up with the update where they mentioned the sales value that has declined almost by 13%, while sales volume declined almost by 17% on a year-on-year basis. Apart from that, let's also focus on Mishra Dhatu because company has secured an order for 306 crores. Keystone Realtors, now this is also on focus, and the reason being that promoter is likely to sell around 3.6% stake via offer for sell, and the share price is going to be somewhere around 550 rupees per share. And lastly, let's also not forget about AkzoNobel because JSW Paints, now they have launched their open offer to acquire 26% of the equity at a price of 3,231 rupees a piece. So definitely watching out on all these counters in a day-to-day.
Okay, thank you so much for that, Gaurav. But let's finally go across to Sudarshan, who's here to tell us what to watch out for in the world of F&O. Good morning, Sudarshan.
Good morning, Vinny. So we are in a congestion zone between 25,200 to 25,300. Nifty continues to see selling and with heavy call writing. And one sector, that is the IT. Despite the good earnings that we have seen from HCL Tech, even Persistent, even TCS was like inline set of earnings, IT stocks have not been seeing any interest as far as buying is concerned. For today, following like a positive global cues, there was a huge recovery in the Dow Jones and S&P as well as Nasdaq that we have seen overnight. We are seeing that GIFT Nifty is indicating a start with gain of around 70 to 80 points for our market. But we'll have to see if we really manage to hold on to levels above 25,200. That would be very important. Now coming to the flows front, both on the futures as well as in the cash market, we continue to see that FI remains on the calls, remains on the short side. Yesterday also in the cash market, FI have sold more than rupees 1,500 crore. In the index futures too, they have sold more than rupees 1,600 crore, and they have built more positions towards short side and added more than 9,000 contracts on the short side. Now come to the options data. Before I talk about the options data, PCR, put call ratio, has fallen to 0.82 from the level of 1.06. So it indicates the huge call writing that we are seeing on the levels of around 25,200 as well as 25,300. 25,200 has seen an increase in the open interest by 40 lakh shares with a fall in the premium to 124. 25,300 has seen a similar move. But in contrary, for put options, 25,100 and 24,800 have seen an increase in the open interest, but also premium has increased for both these options. So support for Nifty remains around 25,000, resistance 25,350. For Nifty Bank, support to be 56,200 and resistance to be 57,000. Two stocks remain in the band, Saman Capital and RBL Bank. Some of those stocks have been seeing fresh longs, and MCX, Ireda, these two stocks are seeing fresh longs, and one stock that I have taken, Piramal Pharma, is seeing fresh shorts.
Okay, Sudarshan, thank you so much for that. Surely we'll be keeping an eye out on all those cues in the world of F&O. But let's go across back to Gaurav. Now he's here to tell us what are we expecting from Axis Bank today in terms of their Q2 numbers. Gaurav.
Well, as when we look at Axis Bank for the last 3 quarters, we are seeing Axis Bank is reporting single-digit loan book growth. Now, in this quarter as well, consensus expect that single-digit loan book growth trajectory to continue. They're expecting just 9.3% growth on a year-on-year basis, while deposits that is likely to grow in the range of 10%. As a result, when we talk about net interest income, now that is likely to decline almost by 2%. And the reason being that there will be some pressure on the margins, and because the asset repricing, now that comes with a lag at most for Axis Bank if we compare it with the peers. As a result, when we talk about net interest margins also, they are likely to decline almost by 16 to 18 basis points versus what we have seen a quarter ago. Apart from that, when we look at the fee income now, that is also likely to remain soft because of the softer growth in the loan book. And as a result, PPOP, which is pre-provisional operating profit, that is likely to decline almost by 4% on a year-on-year basis. When we look at the asset quality and provisions, last quarter we saw technical impact was there, and as a result, credit cost and slippages, those were high. In this quarter, they are expecting credit cost as well as slippages to come down. But at the same time, profit that is likely to decline almost by 18% on a year-on-year basis. So definitely numbers are likely to remain weak. We will watch out on how the commentary is going to be. But as of now, weak number expected from Axis Bank in this quarter.
Okay, weak numbers are what we're expecting this time. We'll keep an eye out on the numbers as and when they come in. But on that note, we're going to slip into a very short break. We'll get you the latest from Wall Street after this break. Welcome back to Power Breakfast on CNBC TV 18. Now, what's happening in the U.S.? President Donald Trump said his administration is considering terminating business with China having to do with cooking oil in retaliation for the Beijing refusing to buy U.S. soybean. China has been the top buyer of U.S. soybean by far, importing some 27 million metric tons, valued at nearly $12.8 billion in 2024 alone. But amid a simmering trade war with the Trump administration, Beijing has not bought a single American soybean since May. And U.S. Trade Representative Jamison Greer says that U.S. President Donald Trump will not stand for China's regime, but expects a solution to the escalation will be made soon. Listen in.
Well, first you saw the Chinese realize they overstepped, and they started to qualify some of their statements right out the gate. And then, of course, the president's resolve remains the same. We can't accept this kind of regime that they're proposing. But obviously, the president's a deal maker. Scott Besson and I have been talking with the Chinese, and we've been pretty successful in finding a path forward with them in the past. So we think we'll be able to work through it. But again, we can't have a situation where the Chinese keep this regime in place where they want to have veto power over the world's high-tech supply chains.
Now, speaking on U.S. and China's rare earth mineral tussle, Ben Emmons says that Greenland is an alternative for the U.S., but adds that they will be reliant on China for quite some time. Listen in.
As we don't have it here, then we have to go elsewhere. So Greenland has been a focus because that holds about 38.5 million of unexplored heavy rare earth deposits. And, the White House has put out some ideas about this compact of free association with sort of a special status agreement that they could perhaps go to Greenland without taking its sovereignty, and then in exchange with Denmark for some infrastructure investment, start doing this rare earth mining exploration. But as you say, it takes really time to actually get that sufficiently out of the ground. The estimates are anywhere from 7 to 10 years to have a mine fully operational and to produce what we actually need. So we're going to be reliant on Chinese rare earth minerals for quite some time.
And the Wall Street ended on a mixed note in a session marked by volatility. S&P 500 pared gains after Trump's China criticism over soybean purchase, while Dow Jones gains after a rally in banking stocks. To get a wrap on Wall Street, we have CNBC's Bertha Coombs joining in with us.
U.S. markets were mixed across the major indexes in Tuesday trading, clawing back some declines from earlier in the day, but retreating again towards the close, as President Trump wrote on Truth Social that China's refusal to buy U.S. soybeans was a, quote, economically hostile act. The Dow was higher by 203, but the S&P 500 fell 10, while the tech-heavy Nasdaq was down 173. Federal Reserve Chair Jerome Powell said on Tuesday that the central bank is close to the point where it will reduce the size of its bond holdings, but he gave no indication about where interest rates are headed in the long run. Powell reiterated his recent comments that policymakers are concerned that the labor market is tightening, which is affecting the balance of risks between its dual mandate of maximum employment and price stability. Meantime, Walmart announcing Tuesday that customers will soon be able to shop with the help of ChatGPT. The company says it's rolling out a new partnership with OpenAI to help shoppers make everyday purchases. Walmart says the feature will allow shoppers to buy directly through the chatbot, which will also suggest gift ideas or help find the best deals for customers. As to when shoppers can expect to see ChatGPT integrated into their online shopping experience, Walmart simply says it's, quote, coming soon.
And as Bertha mentioned, Fed Chair Jerome Powell says that the outlook for inflation has not changed since September, but the downside risks to unemployment have risen. Listen in to what more he had to say.
Based on the data we do have, it's fair to say that the outlook for employment and inflation does not appear to have changed much since our September meeting 4 weeks ago. Data available prior to the shutdown, however, show that growth in economic activity may be on a somewhat firmer trajectory than expected. While the unemployment rate remained low through August, payroll gains have slowed sharply, likely in part due to a decline in labor force growth due to lower immigration and lower labor force participation. In this less dynamic and somewhat softer labor market, the downside risks to employment appear to have risen.
Okay, on that note, we're going to actually slip into a very short break. And after the break, we'll get you the cues in the world of commodities. Stay tuned in. Welcome back to Power Breakfast on CNBC TV 18. Now, the International Monetary Fund has revised its FY26 growth projection for India by 20 basis points to 6.6%. The fund has cited the strong momentum in the first quarter. Ritu is joining with us to give us details from this front. Ritu?
The International Monetary Fund has revised India's growth outlook for the current fiscal upwards, even as the global economy remains fragile. Let's start with India, where IMF has raised the FY26 growth outlook to 6.6%, which is up 20 basis points from the July estimate. This upgrade comes on the back of a strong first quarter and a robust services sector. For FY27, the growth is expected to ease to about 6.2% as momentum begins to normalize. But globally, the outlook is far less upbeat. Global growth is expected to decline from 3.3% in 2024 to 3.2% this year, which is down 20 basis points from the July estimate, and the 2026 outlook remains unchanged at 3.1%. The fund also warns that medium-term prospects are dimming for about two-thirds of the global economy, with emerging market and poorer nations most at risk. Now, the global economy is projected to expand at an annual average pace of 3.2% between 2027 and 2030, which is a persistently lackluster performance compared with the pre-pandemic average of 3.7%. Immigration is highlighted as another aspect of recent policy shifts that can impact medium-term growth in both low-income and advanced economies. Now, under the baseline scenario, the global inflation is expected to decline to 4.2% this year and 3.7% the next. Risks to global growth outlook, however, are tilted to the downside. The main risk is that tariffs could increase further from renewed and unresolved trade tensions. Now, that coupled with supply chain disruptions could lower global output by 0.3% next year. Artificial intelligence, now that stands out as a double-edged sword. On one hand, IMF warns that a potential AI bust could rival the severity of the dot-com crash, threatening market stability and household wealth. And on the other hand, faster AI adoption can unleash powerful productivity gains, which can offer a rare upside in an otherwise subdued global growth landscape. The IMF also says right policies can make a difference. So stable trade agreements, lower tariffs, structural reforms, and smart AI adoption can raise global output by as much as 1% in the near term.
Thank you so much for that, Ritu. But let's move on. And Manisha is joining with us now to give us an update on what's happening in the world of commodities. Good morning, Manisha.
Morning, and thank you for that, Vinny. Well, I'm looking at the coal prices, first of all. While we did see a record high of 4,179, but we've come off those kind of highs at this point in time. Markets are looking at a high probability of a rate cut in the month of October. While that has been a supportive factor, what also is supporting gold is China putting sanctions on 5 U.S. units in South Korean shipbuilder Hanwha Ocean. U.S. also, remember, threatened to impose additional 100% tariffs on China. China, to begin with, also looking at tightening export controls on rare earths. And then you have a prolonged U.S. government shutdown. A lot of supportive factors, really, when you look at the gold prices. But it is off highs at this point in time. What also is off highs is silver. While it did see a record of 53, it's trading slightly below those kind of levels right now. What also has seen a decline really has been the copper prices below $5. Well, markets are awaiting fresh U.S. data to further increase gains here. Markets overall commodities have continued to decline, and that matters to U.S. crude as well. which fell 1.5% overnight. It's trading below $59 a barrel right now. Markets are reacting to the bearish outlook from the IEA, which said that there is going to be a record global oil surplus of around 4 million barrels per day in 2026. Demand is not expected to be very strong. OPEC and other allies are increasing production, so that would continue to weigh on prices here as well.
Okay, Manisha, thank you so much for that. We'll be keeping an eye out on the crude oil prices as well. But in a tragic incident in Rajasthan, at least 20 people have lost their lives when a private bus traveling from Jaisalmer to Jodhpur in Rajasthan caught fire, while several others have been critically injured. Officials say that the fire may have started due to a short circuit engulfing the vehicle within minutes. Rescue operations were carried out by locals and army personnel. Chief Minister as well as Prime Minister have expressed deep sorrow, with the PM announcing financial aid for the victims' families. On that note, we are absolutely out of time on this edition of Power Breakfast. Thank you so much for tuning in. Up next, Bazaar Morning Call.